This is a market review for Monday's trading Nasdaq futures markets on the premise of a demo account, paper trading account with TradingView. This day opened higher. It was a serious gap up on regular trading hours. You can see it was over 200 handles. It opened here 235 handles roughly. That was in a massive premium. The market was trading up throughout, and you saw London trade up, Asia trade up, and the market opened at the opening bell at 9:30 around this 25,643 even. So the open range gap was massive and was in a deep premium, and there was news at 10 a.m. so I decided to wait until 10 a.m. But within that time period we saw price decline massively. Price declined into the upper quadrant of this open range gap. It found support there because essentially there was the 8:30 opening price around that level, and that level coincidentally is also premium week lower quadrant, the same premium week whose upper quadrant is here. So this upper quadrant, this is the consequence weekly forecast. I said I want to see price trade up and eat into those levels right up to the high, and that's what we're seeing. So if you have not gotten the or you have not had the chance to watch the market forecast for this week, it's a weekly forecast. It's the video just before this one on the market forecast and reviews playlist. Check that out so you can understand this. The 15-minute time frame is on that video as well. Everything is well explained as to what was my expectations going to the session. After this, you drop down to upper quadrants where it found support at the 8:30 opening price and lower quadrant of the premium week from the daily chart. Price consolidated, moving upwards gradually. What I want to highlight here is the liquidity run conditions. These are clearly high resistance liquidity run conditions. The fair value gaps are not forming. The few that are forming are not staying open. Like this fair value gap closed entirely. It's ran through like it was not standing there. So fair value gaps are not staying open. Price is not in a hurry. It's just marking time. Candles are overlapping each other. This constant overlapping, these are indicators of high resistance liquidity run conditions. Above these highs, there's no speed. Wanted to see displacement above highs when it goes above liquidity, but it did not. Here as well, we saw it displace above this old high where there was buy sell liquidity, but it's not displaced higher to our objectives. As I mentioned, the market opened in premium. The thing is, on trend days, it's possible to take continuation trades with the direction of the trend. At the same time, we have to know when it is probable to see a reversal or retracement where price is deeply in premium. So these are highly deep premium conditions, and we're far above the midnight opening price, which is somewhere right down here. This is the midnight opening price. London session low is here, and it is expensive on the day. Looking for massive objectives to the buy side, like those ones up there, is not probable given where the market is opening deep in premium. So I elected to see higher prices, but I needed more information. So I was waiting for the news release at 10 a.m. And when that came out, we saw the market rally slowly, but it found support above two key arrays from the sell side of the curve. Those arrays are what I framed a setup on, and my execution was here, moving on to the buy side, aiming for premium week upper quadrant right here. This level did not get tagged on time, and the retracement was too deep because deep retracements are also a characteristic of high resistance stability run conditions. So during the reversal macro, we saw nothing. It was basically time distortion. But this array, the fair value gap, which was inverted here, was later reclaimed here, and price used it to hit upper quadrant of the premium wick on the daily chart to the tick when 11:50 a.m. Now running you through the execution.
All right, so going long on NQ, this trade is long at the high of the breaker, took a bit of drawdown. Protection is below the M15 sell side balance buy side efficiency, which has been inverted or rather reclaimed. It was a CB, rather it was inverted. Price found support on it, found support again at the breaker. I was not willing to be long in a premium, but it is a trend continuation idea. So it's a continuation setup, bread and butter type setup, nothing overzealous, not aiming for something too high, just aiming for the pool of buy side liquidity in close proximity for 25 handles on the Nasdaq. That's very similar to what ICT preaches about the S&P 500 throughout the 2023 mentorship, talking about 5 handles. If you can just get 5 handles consistently, so 5 handles compares to 25 handles thereabout in the Nasdaq, and that's the idea framing this trade, a bread and butter type setup, aiming for a easy objective, which is liquidity, in this case buy side liquidity above the highs formed at the 9:30 opening. So Nasdaq had choppy delivery. There was more of time distortion during this session. Low resistance liquidity runs were not the case. As we just said, there were high resistance liquidity run conditions. And I'm looking to see Nasdaq press above the highs. Went into retracements right into the entry. And an objective is the upper quadrant of the daily premium week from the daily chart. This week, we want to see price trade above those levels and eat through those levels to the upside. And here we see buy side taken, and there are my buy side is taken. I'm taking two contracts off from my 4 contract buy position, risking 0.5%. Buy side hit, 2 contracts have been taken. Stop loss is being traded to break even, and the last portion of the trade is being held to, or I'm aiming for the upper quadrant of the daily premium week. Price makes an attempt to go above. I'm demanding speed above that high. If low resistance liquidity run conditions are about to come into the marketplace, so price is edging towards the TP. The time is currently 10:34, and the 10:30 time is very sensitive. At this point in time, we could see a reversal at 10:30 or a retracement at 10:30. And in this case, we see price beginning to disrespect bullish arrays, trading lower, and I'm sitting on my hands being patient, waiting for the trade to pan out. So I'm expecting to see support at this buy side imbalance sales and efficiency. A fair value gap was meant to support price. I see the consequent encroachment being disrespected. Price is going below its low. I'm looking to see where the bodies are going to be closing. I'm being very patient because it's high resistance liquidity run conditions. there's optimism in my winning trade, knowing that it's possible to see price move higher to my objective, because you know he has to be optimistic with the winners and very pessimistic with the losers. But then, seeing this rally and close above the fair value gap, I'm trailing my stop loss up below that short term low. If the Nasdaq is not giving, it will take me out, and it took me out. That was the end of that trade, and that was the setup.
Okay, now the New York PM session and the lunch session. Lunch is usually a consolidation as the traders go for lunch or as the algorithm reflects on the price delivery of the New York EM session. But today we saw a deep retracement because lunch can be a retracement because there was a very serious leg up. If I span back, you see that price rally. This open, this open at midnight. Price had rallied continuously from that time up till the open. So it was a massive leg up, and at this point in time, the market retraced to some pools of sell-side liquidity from the New York AM session. The first one was this sell-side liquidity pool coming from this old low. It's an intermittent term low. Price hit that very slightly, retraced, and after the open at 130, price went straight for sell-side liquidity, sweeping this and technically inducing this. So this sell-side liquidity pool was not taken. Pre-market lows were also not taken. The pre-market highs were taken at the open. The New York ATM model was not in the charts today because price did not take pre-market lows. So at this going into the close and the final hour macro, which starts from 3:15 to 3:45 p.m. New York time, it was a total consolidation and price shows remained within the range. If you look at regular trading hours to the left right here, you find out that the market remained within a range. So Monday, even though it had high impact news, two red folder news events, it stayed within very tight range. New York AM high for the previous Friday was up here. New York PM lows were down here. After this premium gap up, it remained within upper quadrant, open range gap high and the day's high. So that is it for today's review. Hope you learned something. We'll just keep moving forward. I wish you good luck, good trading, stay strong.